I'll start out by telling you I'm sorry that on this side you're stuck with not my good side. Or maybe it's that side. I think the sides are equally bad, so it's fair. So again, I'm Karl Susman. I'm going to start out today and we're going to go over some issues with Proposition 103, but specifically I want to start out with what's probably on most of our minds, which is the wildfires that have recently happened. So beforehand, I just want to give you a little bit of an idea of who it is that I am and why I'm here, why they chose me. Clearly, it's because of my bubbly personality, but I'm an insurance agency owner for about 30 years, an insurance expert witness in complex litigation. I comment in the media whenever they'll hear me. Had a talk radio show host, and I also write a weekly article in Kiplinger.com, which is an industry-known insurance organization, and talk about, you guessed it, all sorts of insurance-related things. So I want to start out talking about the wildfires. Everyone knows about them, right? I mean, we're in Northern Cal, but it's impossible for you not to have heard about it. But here's some stats you might not have been aware of, and certainly for some reason did not make front page news like it probably should have. Did you know that more than 30 people died? Died. We're always stuck on how many structures and how many acres burned and things. People died. On top of the people that died, there were more than a dozen people missing. Some still are. Over 180,000 people at the height of the fires had to evacuate. 180,000 people had to grab everything that they could hold, get it in their car, and get away because they didn't know if their home was going to be there or not. Some more statistics. Do you know that during the fire, 1 in 10 homes was uninsured? Uninsured, meaning no insurance. You hear a lot about underinsurance, right? I'm sure that will be getting litigated from this fire till my grandkids have grandkids. But there were 1 in 10 homes that they estimate had no fire insurance at all. People complained about prices of insurance. Try and have a loss without insurance. 1 in 10 people did. In addition, there were crews from 9 states that came to help fight the fires. 1,400 fire engines, 84 aircraft. It was monumental. If they didn't take some footage for some movie day someday to be able to show, you're never going to get footage like that again. The impact of the fires. Now, this fire lasted 28 days. Now, having been born in California and raised in California, I know wildfires. They start, you hear about it, and then you slowly hear about the containment starting to happen. And then it goes down pretty quickly, and then you start saying, oh, okay, it'll be all right now. They're dealing with it. That didn't happen with this fire. Days and days and days went by. This fire kept burning, and the containment sat at 0. That doesn't happen. That's not normal. That's not wildfire behavior. These are just some numbers I put in there for you. Again, I don't like to focus so much on how many acres burned. It's more about the lives that are lost. And finally, if you have to have a number, the estimate right now is somewhere around 18,000 structures were lost. 1,000. Someone had said, I think it was a professor back in college, that we can process as people up to about 100, and anything over 100 is just a big number somewhere. But try and imagine 18,000 people not having their home. One, another person, and another, and another. 18,000. This was, again, I can't even process it. Personal impact for me, of my agency alone, our office had 141 total loss clients. That means they woke up in the morning to a home, they left, and never went back. Spoke to clients that were calling us and asking what to do. Everything from, I have a toenail. What? I have to go buy a toenail clipper. Can I do that? I mean, it's this level of when you have 0 left to start from. That was 141 of our clients. Another 50 or so had partial losses. Partial losses in some ways were actually more difficult. They're still being dealt with. We have issues with smoke damage. We've all heard about it. It's still going on. We had to evacuate our own home. I live in Brentwood. Our office had to be evacuated. And we worked for the first 30 days, our entire team, around the clock. So we were available by email, by phone. People were calling, they were texting, they were panicking, they didn't know what to do. And we were there. We were giving the promise. That's, I feel, what we're here for. It's not for the $10,000 water damage because you left the sink on, right? It's for when you lose your home. And we were there to try and help our clients. So how did this impact my job? Well, I think what's important for you to know is what exactly is my job as an insurance broker. So I had to look it up to get it just right, which, fun fact, everything I'm telling you today, fact check it. Go ahead, because I did. I'm not giving you opinions on any of this. I'm just giving you facts. And that's important. So feel free. An insurance broker, by definition, I'm getting closer because I do refuse to start wearing glasses, is a professional who acts as an intermediary between individuals or businesses and insurance companies. They help clients find the best insurance policies to meet their specific needs and budgets by representing clients' interests. Focus on that last part. I represent clients' interests. What makes it interesting for me is because of what I do, I deal with the client. I hear what they have to say. I hear their experience, what they need. I also talk to the insurance companies. I talk to the insurance executives. They tell me about their woes and their issues and their problems, what's keeping their products from being available, what's changing prices, what's happening with that. I talk to people in the media that are interviewing consumers. We've all seen the stories of the people that have lost everything or people that are having problems with claims. So I'm talking to those people as well. I also do some consulting for people on the Hill. They'll ask me, what about this bill? What does this look like? What do you think the impact on this might be? So this is what we do. We start out, we talk to a client, and the client says, hey, this is the house I'm buying. And of course, we're already shocked because they're in California. Wow, okay, congrats. You found it, you made a way to do it. And what is it that you need? Well, you need fire insurance, maybe you need flood insurance, maybe you're going to need earthquake insurance, maybe you have your cars you're going to insure. We go through the whole process, we put it all together, and then we go to market. And we go to our bookshelf of insurance companies, and we say, okay, which insurance company is going to give us the best package, the best coverage, the most comprehensive policies for the price that this consumer is comfortable with? And it used to be a pretty full bookshelf, right? We could use one or two programs and it would go out to the different insurance carriers and we would be able to get the rate and then we could compare coverages, go back and forth with the client. But over the last, I would say, 10 years, really, there has been this steady decline of books coming out of the bookshelf and companies that are not offering coverage. And this is pretty much our bookshelf right now. And it's not hyperbole for me to say that there is no property insurance market right now. Because if you compare it to the way it was before, or you compare it to the way it is in any other state, we got nothing. We literally have nothing. Why did this happen? Well, as promised, let's touch a little bit on Proposition 103. Now, for perspective, Proposition 103 has been around since fax machines. And I actually had a call from someone a couple of weeks ago. I think it was an escrow, and they asked if I could fax over proof of insurance on a policy. I said, I'm sorry, I can't do that from where I am. And she said, well, where are you? I said, 2025. I'm in 2025. We don't fax. True story. But our insurance regulations are stuck in the fax years because the laws that are still governing what an insurance company can do, what they can't do, what they can charge, where they can write coverage, how much they can offer for a discount, are still being guided specifically by this regulation, the fax regulation. We should really give it a new nickname. Now, did you know that Proposition 103 is not just about your home? It's not. Of course, it is impacting your home insurance. It's also impacting landlord insurance. This is for people that rent their home, right? Investors, right? We like these people. It's going to impact people that rent, that have renters policies. It's going to impact condominium insurance. And guess what? Auto. Exactly. I heard the murmur. Where's my brethren? Yes, auto insurance, okay? You don't hear about this, and I think you're going to look at it in a completely different way in about 2 minutes, because I gave you this quick example. We have 2 drivers. Driver 1 has 3 speeding tickets, 5 car accidents, 1 car accident where they killed someone. It happens. 3 tickets for illegal lane change, 2 tickets for running a stop sign. This is none of you, I hope. If it is, please leave far before I do. These drivers do exist. And let's compare them with driver number 2, which has never had a ticket or an accident. Now, if you're an insurance company, who would you prefer insuring, starting with that? You'd probably want driver 2, right? Well, according to Proposition 103, when it was passed, that after 3 years, these drivers get the same California Good Driver discount. They get the same price in 3 years. 3 years, that's it. What do you think that's doing to people's driving habits? Do you think that that's impacting how safe people are driving? Do you think that that's impacting how many people survive car accidents? Is there genuinely an argument to be made that there's blood on the road that wouldn't be there without that free pass every 3 years? I think so. It rewards bad drivers. And again, if you're a business and you can only charge, and you have to charge the same rate for those 2 drivers, are you going to charge a high rate or a low rate? You charge a higher rate. You have to. So the good drivers are subsidizing the bad drivers. It has to be. There's no way to do it. This is also why in that 3-year window, look out for those prices, because the carriers can only surcharge them for that 3-year period as well. So you know what those rates look like for those drivers in that 3-year period? It's not pretty. But don't worry, because in 3 years, they're a California Good Driver again, just like all of us that have never had a ticket or accident. The impact on driver habits, I can't underestimate, because I think it really, really is significant. And we don't think about it. How many of you, be honest, when you hear Proposition 103, you think about car insurance? Probably just the brokers. But, right, that was how it was passed. Proposition 103 passed with one simple tagline: we'll give you 20% off your auto insurance premium. Well, who's not going to vote for that? And if that was all that it did, we wouldn't be sitting here right now, right? Now, you hear about home insurance. So what does Proposition 103 do to home insurance? Let's talk about that. 2 homes again. One is at the top of a hill. There's a small little snake road to get up there. Forget a fire truck ever getting up that road, but it's up there. Zip code 95830, which I think is around here, if I did it right. They've got a few claims, but claims can happen. No fire hydrant in sight. Forget about that. And now let's look at the comparable home, right? They're at the bottom of the hill. They have a burglar alarm. They have a smoke alarm. They have a fire alarm. They're in the same zip code. They've never had a claim. And there's a fire hydrant at the bottom of the driveway. Can you guess where we're going to go with this one, too? Well, according to Proposition 103, these are the same risks. Okay, I'll give you 1 or 2% for the smoke alarm discounts. All right? It's not significant. You're going to be paying the same rate, even though our logical brains can very clearly see that, that doesn't make sense. So is there any incentive for an insurance company to write the first risk or anything even close to it if they have to charge the same price as the one that was the second one? Would you, if it was your money? Now, what this has caused is why we're here. The insurance market is basically dried up. 7 out of the 12 of the top carriers have stopped writing and started non-renewing. The name brand carriers, the non-name brand carriers, you name it, they're non-renewing. They're not writing new policies. Fewer options means higher prices, lower coverage. People are running to the FAIR Plan. You've heard about this, right? FAIR Plan was designed to be a place to go for specific risks that could not get coverage in the primary market. Key there, primary market, meaning that there was a place to go first. And when you couldn't find coverage, then you would go there. Well, as you remember my bookshelf, there's no market. So everyone's running to the FAIR Plan right now. They've more than doubled in size in the last 5 years. It is basic hazard insurance. It is not a homeowner's policy. Again, FAIR Plan is not a homeowner's policy. It is fire coverage. It's not going to pay if the pipe breaks. It's not going to pay if somebody breaks into the house. This is fire only. And by the way, it's really expensive. And of all of the claims that our office is dealing with, I would say 9.5 out of 10 of them are FAIR Plan claim problems. You're probably aware there was some recent litigation that went through that told the FAIR Plan they had to basically roll up their sleeves and start playing with the same rules that every other insurance company is playing with and start dealing with some of these smoke damage claims. So you think, well, with no companies writing and all these carriers non-renewing, there's the great opportunity, right? Where there's big potential exposure, there's opportunity. Well, not really, because in California, who's going to bring their business here? What insurance company when we have such unpredictability? We have 10 bills up the street right now that are being discussed that will impact the homeowners insurance market. 10. I've talked to probably all but 1 or 2 of the sponsors. Their hearts are in the right place. I get it, right? The idea is to try and make things easier for consumers after a claim. Who wouldn't want to do that, right? We want to make things easier. The problem, of course, is that you have to have a policy first in order to then have the process be easier. So if there's no policy, you can regulate all you want, but there's nothing to regulate, right? That's where we are. There is no product to be regulated at this point. Consumer choice has plummeted. I see it every day. It's what I do. If we used to be able to have 20 companies to go to, 30 companies to go to, and now we have 0, or one of them might say,